Financial statement vertical analysis problem 3. Avocado Company reported the following amounts on its balance sheet as of December 31st, 20x9 and December 31st, 20x8. The information is presented in a table broken down by 20x9 and 20x8. Cash and receivables 20x9, $145,000. Cash and receivables 20x8, $85,000. Merchandise inventory 20x9, $145,000. Merchandise inventory 20x8, $200,000. Property, plant, and equipment net 20x9, $820,000. Property, plant, and equipment net 20x8, $800,000. Total assets 20x9, $1,110,000. Total assets 20x8, $1,085,000. Total liabilities 20x9, $455,000. Total liabilities 20x8, $425,000. For the vertical analysis, what is the percentage of current assets as of December 31st, 20x9? We're asked to do vertical analysis. Remember, vertical analysis means we're only going to focus on one of the two columns, 20x8 or 20x9. We're asked specifically about 20x9, so that means we can go ahead and eliminate everything related to 20x8. We don't need that. Horizontal analysis uses one row, two specific years. With vertical analysis, you're looking at multiple rows within the same column. So we have 20x9 specifically looking at the percentage of current assets in 20x9. Now remember, the percentage analysis of the relationship of each component in a financial statement to a total within the statement is called vertical analysis. When doing this vertical analysis percentage calculation, the denominator depends on what kind of item you're looking for. If you're on the balance sheet and you're looking at assets like we have here, it's the item at issue, which here is going to be the total current assets over total assets, over the total assets. That's going to be our denominator. If you're looking at the balance sheet and you're looking at liabilities or an equity item, stockholders' equity if it's a corporation, owner's equity capital if it's a sole proprietorship or partnership, it's going to be the item over total liabilities plus equity. If it's on the income statement, all income statement items that you're looking at issue, cost of goods sold, gross margin, various expenses like operating expense, income tax expense, it's the item at issue over sales. So here, we're asked about current assets. That means that we're looking at the balance sheet asset items. And specifically, we're asked about current assets. And if you look at our rows, we've got cash and receivables, merchandise inventory, property, plant, equipment, total assets, total liabilities. No line for current assets. That's because we have to classify what are current assets. Now, before we do that, we know the denominator in our calculation is going to be, so it's going to be X over total assets. And again, because we're looking at 20x9, we're only at the 20x9 column, our total assets here are going to be $1,100,000. That's going to be our denominator, so we can go ahead and put that in. $1,110,000. Now we need to go through and determine which assets on this list are current assets. We've only got 3 because of below the first 3 assets, we've got total assets and total liabilities. So cash and receivables is an asset, merchandise inventory is an asset, and property, plant, and equipment is an asset. Which of these are current assets? Remember, current assets are assets that are going to be used up within a year or less, or one financial statement or less. So cash and receivables, those are classified as current assets. So that is a current asset. Merchandise inventory classified as a current asset. Again, under accounting assumptions, we're going to sell that inventory off within the next accounting period. Property, plant, equipment, net of depreciation, that rolls over from year to year. We're using that in the business like buildings, land, equipment, items that help us conduct business from year to year. That is not a current asset. So really, the current asset here is the sum of cash and receivables plus merchandise inventory. So we can go ahead and we can add those two numbers together. So $145,000 from the cash and receivables plus the merchandise inventory, $145,000. That's going to give us $290,000. So $290,000 over $1,110,000 equals 26 26.13%. So our number, our calculation, our analysis, what is the percentage of current assets as of December 31st, 20x9? It's 26.13 or 13%. And we have just done the vertical analysis for the percentage of current assets for December 31st, or as of December 31st, 20x9.